It was a tale of two job markets today as Canada reported the biggest decline in more than 3 years. 32,600 jobs lost in March. Economists had expected a 10,000 job gain. South of the border, 228,000 jobs were added in March, and that was far better than the 140,000 forecasted. Let's get insight and analysis from Charles St. Arnaud. He's a former economist at the Bank of Canada. Thanks for coming in today.
Good afternoon.
Is this the beginning of the tariff effect? Because Canada, of course, got hit by tariffs much earlier than other nations, steel and aluminum. Is that what we're seeing here?
It feels like it. It feels like the economy is gradually slowing. We're seeing especially business confidence has dropped significantly last month, so that uncertainty is already having its impact on the Canadian economy.
Okay, so what kinds of jobs did we lose in March, and what does that tell you?
Yeah, well, the composition is actually interesting. Like, there's been some job losses in many sectors, but was primarily in wholesales and retails, which usually would be more linked to domestic demand. So we'll have to see there whether it was, there's a lot of volatility in the month over month, but there was also some small losses in manufacturing and other goods producing. So there might already be some signs of layoffs due to the tariffs.
Is that perhaps indication that Canadians are just wary, right? Maybe keeping more pocket money in their pockets. They're not sure what's going on, so they're holding?
Well, I think the economy is kind of in a perfect storm right now of the high uncertainty from the tariffs. We have also a lot of uncertainty in terms of politics right now with the election. A lot of Canadians are probably worried and asking themselves, okay, is my job actually secure? So they're probably delaying every big purchases they're doing. We saw the housing market has been very underperforming since the beginning of the year. So there is a clear sign of stress in the economy.
And we can definitely expect that on vehicles moving forward, because it's a big purchase that's likely going to go up for a lot of people. Let's talk about the U.S. for a moment as well, because they did better than expected as far as jobs gained in March. So how do you read that?
Well, I think there's different factors. That I think a lot of the job losses that we expected might have not showed up yet. Also, the impact of the tariff will take time. The tariffs on Mexico and Canada, yes, were put in place, but they will take time. Now, with the reciprocal tariffs, that's when we'll start to see a bigger impact on the economy. Again, that will be more developing in the coming months.
Okay, so we're only in the beginning part of April. We're at that point where every day seems like it's a week long. Yeah. We're only in the beginning part of April, and we've heard about the tariffs. We've started to hear about retaliatory tariffs. Tell me what you expect in this month moving forward if the tariffs, in fact, stay in place and we see more counter tariffs.
Yeah, well, obviously, it's clear in Canada the uncertainty is what is really affecting our economy right now. Nobody is investing, nobody is hiring, and businesses are also already starting to reduce their headcounts to face or to be in a better and leaner position to face the tariffs. So that's kind of what we should expect. Then the question is when we move towards the mid-month, what happened with the Bank of Canada? We have the meeting there, and they're in a very difficult situation. Today, there's a clear sign that the economy is slowing and might be marking the start of the recession. But at the same time, inflation remains elevated. So when we get CPI just the day before the Bank of Canada meeting, it will be very important to see. If we don't see any easing in the inflationary pressure, it will be very hard for the Bank of Canada to actually justify a cut.
Can you explain a little bit more about why the Bank of Canada would be hesitant to cut? Because we all think in simple forms, okay, they cut, people will then want to spend more, but that's not actually sort of the right way to look at it in terms of where we are now.
Yeah, well, the problem is that tariffs are what we call stagflationary. You have weaker growth, higher unemployment, deflationary pressure coming from that channel. But there's also the other channel where the tariffs are actually increasing costs for businesses, and the counter tariffs are increasing costs also for consumers. So the bank will have to balance those two. There's also the weakness of the Canadian dollar that we've had over the past 6 months that I feel is what is generating the higher than expected inflation in recent months. So they need to balance that because at the end of the day, the Bank of Canada's mandate is to keep inflation between 1% and 3%. And being so close to the upper end, and actually the recent dynamic is actually above the 3%, they need to be careful, because if they cut too much and miss the target, we saw not too long ago, having inflation that goes too high for too long, how damaging it is for the economy. And I'm sure that the Bank of Canada has, in some way, some trauma from that and remembers that and will be
we all have some trauma from that.
The whole economy has seen the damage it has caused. So the bank will want to be probably maybe overly cautious. We'll see, but they'll be probably more cautious than usual because of that recent inflation increase.
Jerome Powell gave a speech today and is saying, it's a cautionary time, is the way he's kind of phrasing it. What was your takeaway from what he had to say?
Well, it's clear that the Fed is in the same boat as the Bank of Canada. They know the economy is going to slow because of the tariff. They know, even though they're probably in a slightly better situation as a starting point than we are, tariffs will be inflationary. So he knows that he needs to be careful. He cannot signal any rate cuts. He cannot be too aggressive in providing support so that to prevent inflation from spiraling.
Were you surprised at the extent of the tariffs announced by Washington this week? And how much faster, how much does this accelerate a move towards a recession?
I think we knew something was coming. I think where there was a surprise is how the tariffs were calculated. We were expecting something.
The math, yes.
We were expecting something a bit more sophisticated, especially considering what we've heard. We thought it would be a more complicated formula, or at least it would have been more thought in terms of how it was done. So for the rest of the world, it's really a concern, and because it will be a big slowdown in the global economy, and Canada will ultimately be affected too. Like we just saw, like commodity prices, like oil prices. Oil prices is down $10 in 2 days. So it will be a big shock, at least on the terms of trade side of the economy. So Canada, we kind of end up being lucky not having additional tariffs, but we'll still get hit by what has been announced to the rest of the world.
Okay, so are we closer to the edge of recession then?
We could well be already in.
Well, okay. Charles and Arnaud, thanks very much for coming in. Appreciate seeing you on this Friday.
Thank you for having me.
All right.